Shares of EV maker Rivian deep in the red this morning. This after the company reported fourth quarter results. And Phil LeBeau joins us now with the company's CEO. Phil.
Thank you, Andrew. Let's bring in RJ Scaringe. RJ, it was a rough report for you guys. Let's be blunt. Plus, you announced 10% of your salaried workforce is going to be laid off as you guys are cutting your costs. I'm curious, in a general sense, how much has the EV market slowed down in the last 3 months?
Yeah, I mean, we've seen historically high interest rates, and we've, along with a lot of the geopolitical uncertainty, particularly for higher-priced products, you know, in the premium segment, we're seeing the effect of interest rates, the effect of uncertainty, really impact how people are thinking about purchase decisions, and it led us to accelerating the launch of our standard pack to make sure that we have our full portfolio of products available.
So when you look at where the market is right now, your guidance for building 57,000 vehicles this year is well below what the street was expecting at 81,000. Where's the disconnect? Did the market, I mean, we've been talking about the market slowing down. Why did analysts miss it by such a wide margin?
Well, our R1T, R1S products, these are our flagship products. They have been performing really well relative to the market. So we have the best-selling electric vehicle with a price point of over $70,000. And so, as I said, the impact of interest rates is impacting the whole segment, the whole call it premium segment. But relative to the rest, we still have the best-selling product in the market. And so, as we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000. But as far as premium products go, we do have the best-selling EV in the United States today.
Let's talk about some numbers. You lost $43,000, roughly speaking, per vehicle that you built in the fourth quarter, about a $12,000 increase in the amount lost compared to the third quarter. And I know you outlined some of the changes that you're making in terms of cutting your costs. Mm-hmm. Is it realistic to think that you can get back or get to some type of a profit, positive profit margin in the fourth quarter, given the losses where they're at right now?
Well, if we look at the fourth quarter of 2022 and compare it to the fourth quarter of 2023, we reduced our overall cost per vehicle by about $81,000. And that's a combination of better operation, more efficient operations within the plant, and really improving some of the fixed cost absorption within the facility due to the ramp up. But the other big element here is continued progress on our material cost, and that's all the components that go into the vehicle. And so the shutdown that I just referred to that we're going to be making these pretty significant changes across the vehicle in terms of cost structure, in terms of componentry, that is going to be a huge enabler for us to get to positive margin. And as we talked about in our earnings call yesterday, we still have confidence and want to be very clear that the fourth quarter of this year we will be positive gross margin.
Do you have confidence you have enough capital to make it to the R2 and production in 26?
We're incredibly excited about R2. I mean, when I look at the brand strength that we've established with our launch products, the R1T, the R1S, and just how well consumers have responded. Consumer Reports does an annual brand survey, and Rivian came out as the #1 rated brand with by far the highest rate of repurchase, meaning if you're going to buy a vehicle again, would you buy Rivian again? And by a significant degree, relative to all other brands, Rivian came in the number one spot. And so as we think about taking that brand position and now applying it into a smaller footprint vehicle with a meaningfully lower price point, to be able to translate not only some of the brand excitement, but importantly, the significant market share that we've built with our flagship product, we're incredibly excited. So with that said, the organization is heads down focused on delivering to that. The product itself is coming together beautifully. We're going to be unveiling it on March 7th. And that
but
really
real quick,
represents...
RJ, only because RJ, we're running up against a break. I don't mean to belabor this. Understand the strength of the brand and where you guys are at. But to get to my question, are you confident you have the capital needed to get to R2 production, or do you think there's a possibility of a capital raise between now and then?
What we've said is we're very confident in the capital we have supporting operations through the end of 2025. There's a variety of ways we intend to ensure we can launch R2. So there's certainly opportunities to look at the capital markets, but we're also driving efficiency into everything that we do. And the emphasis on driving cost efficiency into operations, into how we deploy capital from a CapEx point of view, and of course, as I said, on the COGS side, on the gross margin side, is the highest focus within the whole business.